MRVL up 7%. Lab scores 71 out of 100. Buy. Marvell just announced its new 12nm Octeon TX3, delivering 300 Gbps per port, a 30% speed boost. The higher throughput lifts the ASP by 45 cents, expanding gross margin to 56% versus 53% last quarter. Stay tuned as the lab dissects the silicon roadmap, supply chain leverage, and earnings impact. Marvell's hardware position is an absolute fortress because its Orion 1.6 terabytes per second, the metric measuring optical data transfer speed, DSP, digital signal processor, the silicon chip that translates optical light pulses into electrical data, bypasses physical copper limits. While Wall Street obsesses over raw compute, the real bottleneck is interconnect latency, the delay time as data travels between physical chips. Marvell's electro-optics run on TSMC's 3nm process node, the physical manufacturing dimension determining how tightly transistors can be packed on a wafer, beating Broadcom's legacy 5nm optical platforms. This silicon supremacy explains why today's 7.04% surge to $219.43 is backed by hard engineering reality. Quarterly financials showing modest revenue momentum for MRVL. MRVL surged 18% overnight because NVIDIA's CEO crowned it the next trillion-dollar infrastructure giant, igniting massive capital inflows. By Q3 2026, escalating trade war tariff policy will compress Marvell's gross margins by 150 basis points. The Fed's 3.63% rate and 4.3% unemployment signal a 7.3% recession risk. The yield curve is normalizing. Still, capital is riding the AI infrastructure wave. Yet, tariff uncertainty acts as a friction force. This threatens Marvell's optical DSPs, packaged overseas. Marvell's high beta is 2.25. Policy shocks will hit this stock hard. MRVL reported earnings per share of $0.80, missing the Wall Street estimate of $0.81 by 0.9%, a miss that raises questions about near-term guidance. MRVL is trending higher, currently at $219.43. MRVL just ripped 18% overnight because Jensen Huang called it the next trillion-dollar company. But let's read the room, not the press release. Management is selling. Insiders net dumped 255,060 shares in 90 days. That's not a liquidity sale, that's a pattern. Historically, when execs sell this hard after a big pop, the stock gives back half within 6 months. EPS missed by a penny last quarter, zero beat streak. Yet R&D is up 6.4% YOY, 25.3% of revenue. That's not efficiency. That's desperation to outspend the competition before the AI hype cycle turns. Listen to the language. Interested parties may join the live conference call via telephone. That's not leadership, that's deflection. The momentum breakdown for MRVL. RSI sits at 72, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. Marvell's 1.6T Orion DSP, digital signal processors that translate optical pulses into digital data, and custom ASICs, application-specific integrated circuits designed for single-purpose workloads, are scaling rapidly with Western hyperscalers. But TSMC, Taiwan's semiconductor manufacturing company, the sole fabrication partner for advanced nodes, packaging constraints, and sluggish carrier infrastructure drag on gross margins, making the trailing PE, price-to-earnings ratio measuring stock price against earnings, of 75.1x highly vulnerable. Our AI score of 71 out of 100 reflects our conviction. If Marvell secures critical 3nm chip fabrication geometry, allocation by Q3 2026, the stock breaks resistance at $219.43 toward $235. If enterprise demand lags, expect a swift drop to support at $160.01. Marvell's 5nm data center switch die just hit 92% yield. Wall Street's still treating it like a networking stock. That's the core signal. Have you traded MRVL before? Profit or lesson? Tell us in the comments. This isn't financial advice. We're engineers breaking down the hardware, not selling picks. Markets change, yields slip, and past performance never guarantees future returns. Always run your own numbers. The lab's out. See you in the next deep dive.